Now, we talk a lot about retirement on this show, and there's a hot topic everywhere. You see it all over
Mhm.
TV. People want to retire, but they just don't have enough. And the time horizon, I mean, that could be decades for a lot of people. And you want to make sure that people have a healthy retirement, a secure retirement, but most importantly, an enjoyable retirement that could potentially be decades for some
Sure.
people. What do you do right now with markets at all-time highs? People should have been doing very well in their retirement accounts, whether they're 401ks, IRAs. What do you do right now to help them have a more secure retirement?
Well, one thing is understanding that since the market has done very well, and maybe your 401k plans are finally looking pretty attractive, the most important thing is making sure they stay attractive. Don't lose what you have in those accounts. Don't lose that profit. Now, how do you do that? You have to learn how to protect your assets, protect what you have. But I think in retirement, to make sure you are financially secure and you enjoy retirement, starts out with asking this question: do you have enough money saved? Could you run out of money? That's huge. Are you ready for retirement, but your retirement account's not so much? We don't want you to say, hey, I've got enough money to cover every one of my retirement needs as long as I don't make it past Monday. That's
Hey,
not that's
don't be buying green bananas now.
that is not a goal. So how protected are you? Are you okay if someone takes maybe 40 or 50% of work what you have worked so hard for away from you? How can that happen? Well, one way is to ride your retirement money down in a correction or a bear market. In March of 2020, which wasn't that long ago, in a 4-week time period, 3 years of returns were wiped out. If you had $1 million account, you lost $100,000 a week for 3 weeks. That's pretty painful when that happens. Now the market has come back.
Yeah, I want you to kind of talk about that a little bit because everybody always says, well, it came back.
Sure.
What they missed out on was a great opportunity on the downside. Plus, that hole from the bottom to where they had to break even, they missed all that time and all
Right.
that potential capital.
Yeah, when the market goes down 30, 40, 50%, it does not come back up 30, 40, 50% the next day. In fact, it has to come up more than that for you just to break even. If you're down 50%, you have to have a 100% return just to get you back to the point where you were before you have the potential for any profit to be made. So it's really important that you protect the assets that you have. The market, when it comes back, it takes time to do that. Markets always go up slower than they go down about 3 times faster. So you have the potential of having a loss much faster with a much slower recovery. And time is a decaying asset, especially as you get older. When you go into retirement, you're just getting ready to go into retirement. If all of a sudden we have a major correction or crash, and 30, 40, 50% of what you have is taken away from you, that has a big impact on the enjoyability part of your retirement. We
Yeah.
don't want that to happen.
That's not one of those C words. It's one of those E words, enjoyment during retirement. And now there's a lot of opportunity with options. And a lot of people love options in
Hmm.
retirement accounts for that. I mean, people want to have a secure retirement. There's ways to potentially protect what you have in your life savings. There's ways for up markets to benefit. There's ways to benefit in down markets. So, and also sideways markets. So you're not at risk to the market. You want to have an enjoyable life. You'll also want to have an enjoyable retirement, but you want to get there with more consistency and more confidence. You were talking about, a lot of people's retirement accounts are probably attractive right now, and they
Hmm.
want to keep them attractive. Think of it this way: do most people have a home? And over time, those homes deteriorate. The siding gets a little rough looking. So what do people do? They try to keep it more attractive. They put new siding on, a new roof, new windows. That appearance is much nicer, and that's what a lot of people want to do with their retirement accounts is continue for them to stay attractive. That there could be a lot of potential downside with retirement accounts coming up.
Hmm.
Now, a lot of people want to protect what they have. I mentioned options. Explain a little bit more what options are. Don't go too deep into it because I don't think we really need to here. But what are options? Why might somebody want to look into those so they're not missing out on these opportunities?
Yeah, so we've mentioned 3 things that I think people are kind of hesitant to want to grasp, and that's options, futures, and forex. Those are things that you just simply don't know about because people haven't taught you. But they're things that the smart money is using, and they use them because they understand that there are significant benefits there for them. Options are is a great asset to use both for income, short-term income, long-term growth, and also for taking in a portfolio maybe of stocks that you want to hold on to, but increasing the returns of them using options. You can use options to boost the returns of a portfolio. You can use options if you don't own a stock to basically put together what we would call a synthetic portfolio. So you actually are participating in the stock market without owning stock. A lot of people listening might have a large position in one company. Maybe it's a company you worked for, maybe something that your parents bought years ago and has grown, and you don't want to sell it because you think it's going to go higher, but you're afraid to hold on to it because you think that if the market goes down, you're going to lose money there. What about a way of not having to deal with that, but still participating in the up market, be protected in the down market? That's one of the things we have. So if you have a large position, come into these classes and we'll talk to you about how to do that. But options are something that is probably the best short-term asset to use when you're retired to not only protect your retirement assets, but to grow them and to generate additional cash off of them. Because when you think about it, you may have 3 to 4 decades of costs when you go into retirement. There's food, there's clothing, there's housing, there's medical costs. 3 to 4 decades, that's 30 to 40 years. But what's missing? What's missing is what has helped you pay for those things while you were working. That's your income from your job. So that's gone. Now, what are you going to rely on? Are you just going to look at whatever that pile of retirement money you have is and draw that down? Every time you take money out of it, it dwindles, and pretty soon it may be gone when you have more years left. That's not what you want to do. You want that pile to actually grow. You may have to take required minimum distributions, but instead of then drawing additional money out, you can use options to maybe replace what the income from your job was providing before, because those bills, that cost of living is still going to be there. But these are all things that we teach you how to get better returns on your retirement accounts, how to protect your retirement accounts, how to self-manage your retirement accounts. So you have, as Josh mentioned earlier, the ability to participate when the market is going up, when the market's going down, and when it's going sideways. That's 3 out of 3, not just 1 out of 3, which is what you're used to. You're putting the odds in your favor to provide greater benefits for you.
Yeah, you kind of got me thinking. I got a young son, and he doesn't like to eat breakfast. He fights to eat breakfast. So I said, if you're going to eat breakfast, I want you to get done before this timer goes off. You know those hourglass timers with sand in it?
Mm-hmm.
That's kind of like a retirement account. If you have capital in this hourglass and it eventually starts coming out and keeps coming out, to eventually that's gone. So you want to be able to turn that hourglass sideways and keep that capital in there. That's kind of the goal, is to keep the capital, but also continue to grow that. So maybe flip it over.
Sure. Or take the top off, put more sand in, so it never actually runs out.
Yeah. So it's all about preserving what you have, but knowing the right strategies and techniques to do that. Al, I believe we got one more. It's baseball season. Let's take it home.
Yeah. Unfortunately, we've got a short period of time coming up, and I've got a whole bunch to talk about. But let's talk a little bit more about retirement, and if we have time, a little bit about millennials and some of their issues. And then also, we had a lot of calls last week when we talked about women. So let's talk about women again.
That's a good topic. So retirement, millennial, pretty much anybody that's listening right now, especially for retirement accounts. This is Josh and Al. We will be right back.